Welcome to the Explainer. Okay, so how does a company go from a $20 million startup to a $1.1 billion giant? In just 15 years. Today we are breaking down the incredible story of Pruzen and how a small group of founders managed to turn a massive financial crisis into an even bigger opportunity.
So, let's just put this into perspective for a second. In 2010, you've got this little startup, born out of a crisis with 20 million bucks. Fast forward to 2025, and it's a massive Caribbean conglomerate with over $1 billion in assets. Now, that's not just growth. That's a 55 times increase. So what on earth was the playbook that made this incredible journey possible?
All right, to really understand this, our story has to start in Jamaica, right in the aftermath of that 2008 global financial meltdown. The local market was, in total turmoil, but a really unique set of circumstances was creating the perfect launchpad for a bold new venture.
It was, no exaggeration, a perfect storm. Global credit markets were completely frozen, and, right at the same time, a local government debt swap, called the JDX, basically tanked the returns on all the safe investments. So investors were left with this huge problem. Their money wasn't making any money, and the Jamaican dollar itself was losing value. They were desperate for a safe place to put their capital, specifically in US dollars, and this created a massive, massive vacuum in the market.
And right into this vacuum stepped four of the biggest names in Caribbean finance. People called them the Fantastic Four. And their reputation, that was their single most valuable asset. In a market where trust was completely shattered, their credibility was the key that was going to unlock investor confidence.
And boy, did they prove the market was there. In February 2010, they went out and raised $20 million from about 150 different investors. I mean, in that climate, this wasn't just raising capital, it was a huge vote of confidence. The market was absolutely starving for what they were offering.
Okay, so they had the money, and they clearly had the market demand. But what was the actual strategy? How were they going to turn that seed money into an empire? Well, it all came down to a classic, brilliantly executed playbook.
Their whole strategy was built on the private equity model, but with a little twist. See, instead of just managing other people's money, they were using their own capital to become owners. The plan was pretty simple, really. Buy companies that were undervalued, go in and make them better, and then either hold them for the long-term cash flow or sell them for a big profit.
The Access Financial deal is the perfect case study of this in action. They found a microlender whose stock price was way down because of some internal issues. They bought a controlling stake, but here's the masterstroke. They merged their own small loan business right into Access. This move instantly created scale, made everything more efficient, and it turned Access into an absolute cash cow for years and years.
And they showed this model wasn't just for finance companies. They invested in Knutsford Express, a luxury bus company. When they sold their piece of the company in 2016, they more than doubled their money. This was the proof right here that their strategy, finding good companies, giving them capital, and fixing their governance, could work in the real economy too.
So after totally proving their model worked in Jamaica, the next logical step was to expand. The goal was pretty clear. Stop being so dependent on just one country's economy and start earning more of their revenue in stable US dollars. And their expansion was, well, swift. Over the next 5 years, they basically went on a strategic shopping spree across the entire Caribbean. They bought an offshore bank in St. Lucia, then a major food producer in Barbados, and then a domestic bank in the Cayman Islands. Each one of these acquisitions was a very deliberate step into a new market and a new industry. The St. Lucia bank deal really shows their knack for finding a great deal. Get this, they paid just over $12 million for a bank whose assets were actually worth over $20 million. It's called a bargain purchase, and it's literally like buying a dollar for 60 cents. This meant they got to instantly record an $8 million profit on their books the very day the deal closed. Incredible.
Now, their move into food manufacturing with Roberts? That was a classic diversification play. As the quote explains, the logic was super simple. People have to eat, even when the economy is bad. This gave them a stable, counter-cyclical business to balance out all the ups and downs of their financial investments. It was a really smart hedge against downturns. The Fidelity Bank acquisition in the Cayman Islands, well, that was the capstone. This was the deal that officially pushed Pruzen's total assets over that $1 billion threshold, really cementing their status as a true regional powerhouse. But, as you know, with great size comes even greater challenges. As global interest rates started to rise sharply, Pruzen's whole business model faced a new kind of pressure, and that forced them to make another really smart pivot.
This led to a huge shift in their real estate strategy. See, they had made a fortune on these big one-time profits from building and selling luxury apartments. But in this new economic environment, what they really needed was predictable, steady cash flow. So they pivoted from the build and sell model to a build and rent model, focusing on industrial warehouses that generate that steady rental income month after month.
And that brings us pretty much to the present day, where two massive events in 2025 are setting the stage for Proven's next evolution.
First, the founding CEO retired and a new leader took over with a very clear mission: double the company's earnings. And second, in what was a total blockbuster move, Proven announced a strategic alliance with Cornerstone Group, one of its most aggressive rivals. This alliance basically creates a financial titan in the region, and they have a very specific goal of maybe combining their real estate assets to create one massive property company.
So this leaves us with a final, really fascinating question. Proven's journey is an incredible business story, no doubt. But now, as it joins forces with such a powerful rival, what does this mean for the rest of the market? Is this new titan going to drive innovation and growth for the whole region? Or is it going to become such a dominant force that it actually stifles competition? The next chapter of Caribbean finance is really just beginning.